Hello, everybody, and welcome back to the Mobile Mailbox Money channel. We provide capital investors passive opportunities to earn a safe, stable, and secure return in first and second lien positions in collateralized lending opportunities. Today is brought to you by Silvercrest Opportunity Fund. Invest accredited in a 506C accredited investment fund, earning a 10% net return for a 1-year term or 12% net for a 3-year term in an income-oriented investment strategy, investing like Warren Buffett. Today, we're here Friday, July 25th, here in Scottsdale, Arizona. Got Sean Gibson with Win Mobile Homes and Mobile Mailbox Money. Sean, appreciate having you today. For the viewers that don't know you, just quick about who you are and how you'd introduce yourself to maybe an investor that may be watching here today.
Yes, thank you, Alden, so much for having me. Yes, my name is Sean Gibson, and I'm with Mobile Mailbox Money and also Win Mobile Homes. Yes, I've been an investor for the last 10 years and started working with Mobile Mailbox Money. Really, my overall goal of my investing strategy is how can I help investors? We're always looking for opportunities, but when I found, obviously, Mobile Mailbox Money and Win Mobile Homes, I thought it would be the perfect fit just because a lot of investors in today's real estate market, they're looking for fix and flips. They're looking for lease options. They're looking for wholesale deals, but they're really missing the boat. So something that really kind of just struck my mind. Hey, look, I can help investors find great opportunities in passive income without toilets, tenants, and rehab. So yeah, that's me in a kind of nutshell, helping investors.
Teaching people to become the bank,
Yes.
private lending at the end of the day. Sean, you had a couple questions. I think let's just paint over a couple real quick, get some value out the way.
Yeah, absolutely. So I'm going to go to question number one. For people who don't know, what is a note?
So essentially, a note is a promise to pay. You have a borrower and a lender, the lender being the bank, with specific terms and contractually agreed upon. So it's essentially a promissory note, a promise to pay that ends up being secured with a collateral piece. So they post their collateral on a specific asset, depending on the class. This happens to be in affordable housing and manufactured homes or real property lien positions. And you can buy that note. Most people don't know you could buy a mortgage. So that's what a note is.
Right. Okay. Excellent. Another question is, if someone purchases a note, how do you guys qualify your clients for notes? How does the whole process work in a certain sense?
So the end user or the borrower is put through a qualification processes. So opposed to us just sitting down at a diner and taking a deal and saying, hey, here's a seller finance loan. We put them through specific processes in order to fit Dodd-Frank compliance, but also facilitate the ability to repay, which is important. We make sure that client's a qualified individual coming to the table with verified income and ultimately a satisfactory debt to income ratio. We take overall financial well-being into account on a case-by-case situation in specific scenarios, but they're a qualified client.
Okay, excellent. So some questions that some of my investors have. So Sean, if I buy a note, and what happens if the note buyer, if the note seller passes away, the borrower passes away? How am I still protected?
Yeah, so great question. There is recourse. There's a physical piece of collateral backed by the lien position and note or promise to pay. Ultimately, an heir would either have the option to pay off the home or whatever it may be if payments stop. Also, if non-payment does occur, you have your formal repossession processes, which is pretty different in comparison to residential real estate lien positions, as it's a repossession process where real property would be foreclosure. Personal property notes are a repossession process. So if someone does pass away, we end up taking back the property, putting it back for sale, and mitigating loss or even making additional profit in some scenarios. So, there is a physical piece of collateral that's tied to the loan opposed to a non-secured debt program.
Gotcha. Excellent. And although who are your clients normally? What's your client base look like?
So on one hand, for the end user, we're looking for people that want to match or beat market rent with ownership. here in the Valley. And essentially, that's a tough thing to accommodate outside of manufactured housing. So, blue collar workers, small families, first time home buyers are kind of, or active retirement, big retirement communities here in the Arizona market. For the investor, really, it's private investors with IRA money, solo 401k, or really money on the side because of scared of the volatility, what's going on in the market, of uncertainty, waiting for interest rates to reduce, looking for that safe, stable, contractually agreed upon return, opposed to operational risks in, owning an asset, getting a safe, stable, secure return, or, even great alternative to the private investor that we look for is like hedge fund managers, or people that manage private money, family offices, all areas of investment avatar that we look for out in the market.
Excellent. Okay. And question: how long have you been in business? Because we see a lot of gurus all over Facebook and Marketplace and YouTube. But how long have you been in business? And how many deals have you guys done?
Sean's got the great questions today. We've been in business 8 years, operating strong in manufactured housing. Started as a dealer of mobile homes, buying and selling for cash. Found availability to institute a seller carry finance program. Had to get nimble within the notes that we were seller financing. Started raising private money for those positions, and now we've started a fund. So we've done 300 transactions or more here in the local market of Arizona with a 2% default rate. Institutional recognition from people that own mobile home parks, those major corporations and publicly traded companies. So, long-standing track record here in the Arizona market, and possibly some other markets coming soon as well.
Okay, excellent. So we're around a lot of investors, and I get asked all the time. They told me to ask all of this. I'm a real estate investor. Why don't I just take my $200,000, buy my own mobile home, buy it, fix it up, find a buyer, owner finance them, and keep all the cash to myself, opposed to paying you guys? Why don't I just do it myself?
Yeah, so most people we talk to are busy business professionals. Buying and flipping houses is a full-time job, and if you don't treat it as such and it's a side gig, a contractor is either going to rake you over the coals,
Yep.
or it's going to take you longer than originally anticipated, and those carry costs end up stacking up. And really, what were we in it for in the first place? It was the want for financial freedom. So if I can go and buy a pro forma asset at or below market value on a note investment strategy and make a double-digit interest rate, and not have to skip Christmas dinner or any other holiday because I need to get this house finished after flipping it, and it's on the market or whatever it may be, I got to meet a buyer. You become the bank. So it helps people after that they've experienced the hardships of fix and flipping and owning long-term rentals. This is for the higher intelligent investor, someone that's making great money, and maybe their primary job, whether a lawyer, a dentist, other doctors, people that are making great income but don't have the time or want to go and fix and flip properties. If you want to learn to fix and flip properties, we could probably help you do that in manufactured housing and help you navigate a seller finance strategy. But there's risk. There is additional risk within a flip strategy. There is sweat equity. There is availability needed in order to navigate a strategy. But for the higher intelligent investor, looking for a position that outperforms a rental and is no longer volatile, with the markets, they may be an IRA or, another hedge fund that wants to parlay their interest from their cost of capital. Those are the investors we're looking for. So if you're looking for the super juice in a transaction and you want 20 to 50% returns, this isn't it for you. At the end of the day, that sounds like a higher risk strategy, and there's room for that at the end of the day, but for the diversified investor seeking for that portion of their portfolio, for stability and even retirement savings, that's where it comes into play and really starts to make sense for a lot of people.
Okay, appreciate that. Great answer. Of course, one of the number one questions I always get when we talk about manufactured homes is to my investors, what happens if all of a sudden the seller, the owner gets mad and they take the manufactured home out to Casa Grande and I can't, and then my asset's gone. What do we do then?
So highly unrealistic. The cost to even remove a home nowadays is pretty substantial. I've heard as much as 10,000 per side, and that's just for transport. You still have to return the lot to its original condition. Otherwise, you're held to the contractual agreements from even the parks that require certain items to be remediated. In order to transport a unit, you still have to hire a licensed transportation specialist because you can't just move it on the flatbed of a truck. You have to hire an actual licensed individual. That licensed individual is going to reach out to the park and any lien holders on that property in order to make sure that that's actually legal for them to do. So, highly unrealistic. If worse to come to worse, there's still a physical asset. Let's say hypothetically that they hired a black market transportation specialist and they moved at midnight on Saturday. That would be the only realistic item that could be, almost accomplished, but, highly illegal, not realistic. Anything could happen at the end of the day. That would put the note in default per the contractual terms of their agreement. So for the loan, the insurance, the park, a couple different factors that kick in if that were ever even to be a question from the end user borrower.
Cool. And then excellent. And then also, since obviously we're in real estate investing and you hear about all these, apartments and syndications, fix and flips, why don't you ever hear about manufactured housing? How come it's not a sector you hear of the gurus or there's big conferences? Normally why come we don't hear about this in the national HGTV fix and flip show stuff?
I think the transaction base makes it unappetizing because the lack of understanding of how to navigate a transaction in personal property and the lack of available financing conventionally for the exit strategy. So it's a couple arms of that limits an individual that's maybe in my position, in our position of flipping homes. You have to get nimble in the exit strategy because your exits are limited from the end user having available financing to buy that property for what it's worth. And to navigate the seller finance, cultivate private collateralized lending opportunity for investors and becoming a brand really has solidified that business in itself. So if there were other people fixing, flipping manufactured housing, the scale is in the seller finance. And that's why most people don't really talk about it because they don't see the validity in the exit strategy. They find hardship because not everyone has 50 to 80,000 bucks to pay cash for a property. And when they go try to find financing, it's almost non-existent. And when it is existent, they have stringent criteria. So, multiple areas of understanding that's needed in order to intelligently navigate the process. We know every large lender nationally that provides third-party financing. And if that buyer actually seems like they will qualify for that, we'll run them through there, at the end of the day. But not a lot of people understand the in and out of financing, the transaction base, the title work, how it's secured, and to intelligently convince an investor about the opportunity and the potential downside risks of a transaction like that.
Okay, excellent. And of course, I'm getting more of these questions. So I know you guys have expanded into Florida, and the questions I get from my Florida investors are two things: insurance and will this thing be in the ocean one day? So,
we're validating those concerns. We have insurance quotes. So the properties will be insured. It'll be a cost to the borrower, but they're already paying that cost in the market anyway. If they're living in the area, there's people that have insurance policies and they're insured. We're going to pick and choose on what areas we navigate into and how we limit potential risk. The the likelihood of that happening in these specific areas is low. Anything could happen, but it is insured, and the cost is deferred to the borrower. Coming from Arizona, we're pretty spoiled, as we don't have a lot of natural disaster risk, but Florida being Florida, it's a great market. People are still moving to Florida, just have to navigate that and price that into our acquisition as well as our risk mitigation. So let's do this, Sean. That's 10 minutes of questions.
All right.
Your intro. We've got a couple notes actually that are on our website right now at mobilemailboxmoney.com. So you can actually go to Mobile Mailbox Money, create an account, and see the notes that are actually live available on our website. This one, lot 310, has an error in the listing balance of the unpaid balance. But this is a note that Sean was actually pitching to another private investor of ours. This is lot 310 identifier on our website at mobilemailboxmoney.com. And this is a 3-bed, 2-bath manufactured home off major cross streets of Kyrene and Baseline. And we're getting a borrower currently going through our underwriting process. I bought this home for a negotiated purchase price of $26,000, and we have it under contract at $72,500. So that's like a $40,000 swing as we close this property out, and value sufficient for our previous deals that we've done in these communities. So at $72,500, we have it contracted at for the end user borrower at a negotiated discount because they bought it early. They're putting $5,000 down. And that's about what's that? 67.5 as an unpaid balance.
Yep, that's correct.
That monthly payment on a $67,000 500 acquisition,
$888
is $888 a month.
Woo!
For $67,000. Where else can you buy an asset for $67,000 and make passive $888 a month for a 20-year term that's amortized? And depending on what kind of term you want, that'll negotiate what your payment is and your return on investment. We have terms as low as 1 year, but to find even an acquisition for, say you were trying to replicate that in single family, even in the Midwest, you're paying $150,000 to $200,000, and you're probably not in a great area. This is in Tempe, Arizona, as a 3-bedroom in the major market of Arizona, $67,800 passive with no banks, right? Remember that. No banks, no leverage needed. You're the bank. You become the lender. So Sean pitched that to one of our investors this morning.
That's right.
I think he asked, what were some questions that he asked, Sean?
He just asked for the terms, and this is right up his alley. The price point, the double-digit return. So, yeah, I think he's going to pick this one up. He bought 3 from us like last month, so I think he's going to pick this one up for sure.
So, Sean just lightly touched over that. Could have been $250,000 in transactions on 3 deals last month. That means that higher net worth investors are taking big plays here and starting to stack what? Cash flowing assets.
Absolutely.
To try and replicate that in any other strategies, you'd have to spend probably 10 times the money, literally, in order to achieve the same cash flow and have even a lower return on investment. So I'm going to share my screen, and we're going to go over one last note. Let's just choose at random on the website at mobilemailboxmoney.com, and I'll have Sean kind of give it some color here.
Sure. This is a hot one, but I'm going to go lot 9.
Lot number 9. So I think we got a soft commitment from an investor, and he's actually, I think, in the next 30 minutes going to send the wire transfer. But just, let's talk about it, right?
Yeah. I want to talk about that just because it's in an all-age park. And another thing, the price point. I mean, the price point at $35,000. Where can you go actually to invest anything? Maybe crypto, but I mean, this is a real life asset. And you're
So
getting
good.
in on the ground floor with a construction loan. That means you're going from start to finish. Obviously with a price point of 35,000, with a double-digit return. I mean, a 2-1. I mean, it's what an opportunity. This isn't Apache Junction. People love to be kind of out in Apache Junction because it's wide open. It's clean. It's more rural, but we're getting a lot of action out there. But that's kind of what I can speak to.
And this is, just to clarify, it is a 55 and older park.
Jimmy, it is 55 and older. That's correct. You know what? In that area, it's probably even better because that area is a little bit older. So that's almost even a little bit better.
So this we acquired at a deep discount. We get case unique deals just like this. We may have only paid, under $10,000 for this, but this house is well worth 50, maybe even more. Why? This property was actually rehabbed previously with this walk-in shower, new vanities, new kitchen cabinets, new granite, new
steel appliances.
And stainless steel appliances that are staying with the property. You got your central AC unit and new siding. This stuff's all new siding that they did. These people were in a distressed situation, and you can actually watch me as a vlog style video acquire this property on my profile at Alden Guajardo on Facebook. I think that may be on YouTube as well. But this is lot 9 in Meridian Mobile Home Park. And I actually live negotiated with that client as we went live on my profile. They got a great, convenient transaction, and we closed same day. So those are just kind of a few of the notes that we have available for investors that may be watching here today. Don't hesitate to reach out. Sean would love to talk to you. You can be reached where at, Sean?
I can be reached at 602-88-CASH, extension 106, or of course you can go to Mobile Mailbox Money and email me directly there as well too, or at Sean@winmobilehomes.com.
So that's a couple questions today. We may do this every Friday, kind of like this format. Sean talks to a lot of investors. They got questions and we got answers. So unfiltered value here, free education. People charge for stuff like this. This is your view into the back office of creating notes in an institutional investment program, cash flowing like Warren Buffett. That's Mobile Mailbox Money. Today is brought to you by Silvercrest Opportunity Fund. Invest today with silvercrestopportunityfund.com. Sean, appreciate having you.
Buy a note. It's easy. Passive income. Just buy a note. Set it and forget it.
Today. Thanks so much for viewing. Like, comment, follow, and subscribe for more. If you liked what you saw today, if you don't see something that you like on our website, please don't hesitate to reach out. Everyone enjoy their day and have a great weekend. Appreciate you being here, Sean.